Good afternoon, everybody. It's Chris Robinson, Robinson Marketing with today's post-close grain and livestock comments. The last day, Friday, July 31st. Farmers probably happy to see it go. D's corn down 4.5 cents. Traded as low as 61, 64 here. This area is very big. It's basically the 50% retracement of the 66-cent rally we had, or nearly the 50% retracement, depending on where you draw it from. If you take that low, 425 and 3/4 made the night of the acres report, right? Remember that low. Then we topped out at 92. 459 would be exactly halfway back. We traded to 461. We did settle at 64. 66 and a half has been a big pivot. It's the 38% retracement of that level. So was enough done? We'll see. What was the driver? The weather. The afternoon weather forecast came out and you saw it pressured the corn, wheat, and beans. There's going to be an inch of rain. Now that could change. Sunday night, Monday morning, we'll just have to wait and see. One thing that's good, we've had excellent demand. I can't imagine what the prices would be if we had lousy demand, right? Novi beans, almost the 20-cent range today. Last night we looked like we were going to print $12 again. We petered out at 11.96. They hammered on it today, almost got the 62% retracement. We traded as low as 11.80. I was kind of surprised that we didn't go get that. If you take the low of the move, 11.21, and then the contract high and 3.5-year high, 12.56. You got to remember, if you're reading my letter, nobody ever calls the top, right? I'm not saying that. But boy, if you didn't want to sell beans or hedge beans at a 3.5-year high when we were $2 off the bottom, we started the year at 10.55. So to hesitate or not want to do anything at 12.50, yeah, it could have gone to $14. It still might. I'm not saying it can't do that. I'm not saying that, but it was a great opportunity. And even anything here at around 11.80, 11.90, that's still a damn good sale considering we started the year at 10.55. So all is not lost. You may have left the top little bit there, but don't be in a situation where we're back down to 11.20 or $11 going, oh, they got me again. The speculators got me again. That's not true. You had plenty of opportunities, and what it is human nature is being what it is. When it goes to 12.50, you want 14.50. When corn goes to 4.90, you want 5.90. That's human nature. That's thousands of years. That's the way people are. That's the way markets correct like they do. So if you do the math, you take that 11.22 to 12.56. This 11.89 area is halfway back. We settled right on it. Next downside risk is around 11.75. Are we going to get there? We'll have to wait and see. Even at 11.89, it's relatively good price. Wheat got absolutely hammered today, but it did make a comeback towards the end of the day. Same math. You take where we were on June 30th at 574, and then we hit 711 on July 24th, just 6 days ago. And lo and behold, we traded just about the halfway back today, below it actually. Some guys were looking for us to go even farther, but that wheat chart, that's how these markets correct. And no, it's not fair. And no, it doesn't make any sense. And yes, it's hard. And yes, yesterday we had spiked up to 686, and people were getting excited about making new highs again. And that's just absolutely vicious. And that's the way wheat trades. From 686 high yesterday to a low today of 634. Okay, in 24 hours. So again, even if you've done nothing so far this year, 639 is not a terrible price. We started the year down at 540. Okay, so we still have a lot of risk ahead of us with the weather moving ahead, but at the end of the day, it's good to see us gone. The net changes, if you want them, here they are real quick. D's corn down 4.5 cents, 4.64. Novi beans down a penny and a quarter. Only a penny and a quarter. We settled at 11.87 and a half. And wheat, Chicago wheat down 24 and a quarter at 6.39 and a quarter. KC wheat down 23 and a quarter at 7.07 and a half. KC wheat did hold $7. On the flip side, end users or guys that sold it up there, Believe it or not, we were rolling down calls for end users because if you're someone whose bottom line gets hurt if wheat goes skyrockets or corn skyrockets, after a $1.25 rally in wheat, a 60-cent break is something to take advantage of if you are an end user. After a 66-cent rally in corn, a 35-cent break in corn, it's something to take advantage of. Not to say that corn can't go lower, but from a risk management standpoint, you have to remember that farmers get hurt if prices go lower, end users get hurt if prices go higher. It's a daily battle. We'll get back at it next week. Pretty good action in cattle. Cattle finished up a buck 55 in August. Fat cattle finished up 50 cents. Even the hogs bounced off after getting hammered. I'll cover all this in the weekly wrap tomorrow. For now, this is Chris Robinson. Um, if you're curious about my program, take a look at it, Robinson Ag Marketing. I provide specific cash sale recommendations and percentages. All this week earlier and before uh, the last the last sell-off that we had, I have been sending out recommendations to guys on the best way I thought there was to hedge that rally. Again, nobody has a crystal ball. I don't have a crystal ball. I'm not one of these idiots that you see on social media that are always just bullish, 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 or vice versa, always bearish, bearish, bearish. I try and look at it from my standpoint, which is I've been doing this for 32 years now. I stood in the trading pit for 22 years, and I know how difficult this can be. And my job is to help producers and end users manage their risk. So, on that note, if you're looking for help, give me a call 312 638 8868. I would say, all things considered, especially in the beans, this close has to be considered a victory. And we will see next week if this halfway back was a buying opportunity for the Bulls or it was the last train out before we slide lower and go back down to where we were on that June 30th acres report. Everybody have a great week. This is Chris. Take care.